switch. You have met Oliver on this programme before, trying to sign up people to switch things like energy providers. What else? Remind me, what other things?
We did electricity, dual fuel, health insurance, broadband. And the basic simple model, Matt, is that we use the collective bargaining power of a large group of consumers. So it's kind of a people power initiative. So people register with us, and then on behalf of our members, we go and we negotiate with providers to try and get an off-market, lower deal than what people can get as consumers on their own.
Okay. And you're going to try that with mortgages now?
Yep. Going to try. Started yesterday.
Is that not going to be more difficult because of the nature of the legal arrangements in place with mortgages, that people have to sign deeds in relation to the properties, solicitors get involved? It's not as simple perhaps as changing your mobile phone supplier, your health insurer or your energy supplier.
Yeah, look, all sectors have complexities, Matt. There are segments in all of them, whether it's health insurance or whether it's, people who have gas and people who don't have gas. So you're always going to find providers who want certain segments or are targeting certain segments. I mean, this is no different. There are some complexities to it, but I think what we've proven in this model is that if a lot of people get together, then the providers pay attention. And for us to be able to go in to banks and mortgage providers and say, look, we've got 25,000 people signed up who want an off-market better deal than what you're offering now, that works. And, sure, there are complexities that we'll deal with.
How much a better deal? What are your ambitions?
Well, we don't know. I mean, Charlie was talking about the gap that's there between the EU average and what we're paying here at about 1.4%. That's on an average mortgage, that's €2,500 a year. Now, I don't know, can we aim for that much? But there are big savings there. I mean, we were saving people maybe €200 or €300 on electricity. The potential savings on mortgages are even bigger. We don't know yet. We're going to have to start engaging with the providers and see what they do. But
is it all going to be with the one bank? Say, for example, I'll just take an example. If you have a mortgage with Bank of Ireland, does that mean that you have to form a collective of Bank of Ireland mortgage holders who will get a better price on their mortgage? Or would you be looking perhaps to move to a new lender rather than doing a deal with the existing lender?
Exactly. You could move to a new one, but also this may not be one single deal. A number of providers can target certain cohorts or certain segments of what our membership base will include. It is more complex. But look, man,
but it is. Say if you have that Bank of Ireland mortgage and you say you can get them a deal with AIB, you are going to have to go through the expensive legal process of actually managing to shift the title of the deeds to the mortgage from one bank to the other.
Well, that's going to be part of any deal, hopefully. I mean, it's up to providers to try and it's up to those who want to gain market share to put something forward
but
that will attract.
It's not necessarily part of it, because say if you put together all the Bank of Ireland customers who might come in for one big deal and go to the bank, you might be able to secure a reduction in rate, but you wouldn't actually have to change anything to do with the security and the mortgage, and you wouldn't actually have to get the lawyers involved at all.
That's true if they stay where they are, yes. But I mean, if people are going to switch, that might be part of it. Look, we're going to have to see what the providers say when we kind of start to engage with them. There will be different segments. What we've definitely proven, Matt, and this is just a simple message, if a large number of people get together, we can get creativity and we can get better prices out of providers.
Charlie Weston, what do you make of this?
I think it's definitely worth a try, Matt. I mean, I think it would rattle the bank. You take your example of Bank of Ireland. If they thought they were going to lose a big chunk of their mortgage customers, and you're talking about people here who are probably meeting their payments, who are not in arrears, not in negative equity, they're good customers, they're ideal for the bank. If there's a threat of those people moving to another bank and are going to be facilitated by the one big switch, the Bank of Ireland will respond. So, even if people don't switch, it will generate kind of some sort of competitive environment in the market, which is what we desperately need, because at the moment they're quite happy to keep us all captive. Those people who are on variable rates, don't have one myself, but they have people captive,
Matt, what we found with our members before is when we negotiate the best deal that we can negotiate with the buying power, we make it available to people, and there may be different offers. People in the past have taken that offer and either availed of it and joined up and taken the offer, or else they've used it to negotiate with their existing providers.
Yeah, because isn't it a bit more difficult though when you come to a mortgage because of the legal nature of the product and the contracts and the length of time?
It may well be, man, and that's why we have only a limited amount of switching. What we're trying to do is break that open and crack that open a little bit.
But Brian and Lucan says there's no guarantee that if you switch mortgage, the lender or mortgage lenders, that the new lender won't subsequently increase the rate above what you're paying now. So you'll be paying more as well as having paid the solicitor's fees.
That's a big problem. We've seen this a bit before, Matt, with some lenders where people switched to them, or else new business came in, new buyers, and they signed up for them. And the next thing, these banks offered reduction for new business, but not to those existing customers, and that is a terrible problem.
Or you could have
And
a situation whereby, and I put this to you, Oliver, that you could do a deal on behalf of your members, and in a year's time they just up the interest rates by 1%. All the savings are lost.
Well, we've done that before on the electricity side, where some of the electricity providers that we've worked with have offered the same deal that we negotiated on behalf of new members and switchers to them to their existing customers. So this is part of the landscape that we try to negotiate.
It would be very simply reformed or changed if the government and central bank brought in a rule saying you cannot offer a better deal to a new customer, a mortgage customer, because of the dysfunctional nature of our mortgage market here. This is very necessary protection for consumers. You cannot offer a better deal to new customers than you're giving to the existing ones, and that would really level out the playing field.
Okay.
You see a lot more switching then.
But this is only for people on variables, I would assume.
It's essentially virtual.
If you have a tracker, as you keep
You're not going to
saying,
move.
You don't move
and
it.
if you're fixed, you're locked into that because you pay a penalty.
So, Oliver, is this only for those on variable rate mortgages?
No, Matt, look, there are complexities in this. Look, I'm here with one really simple message today. Go and sign up. Join this campaign. We're
Is there
going
a cost
to negotiate.
to signing up and
no,
joining
there's no cost. It's obligation free. You go to onebigswitch.ie, you give us your email address, you become part of the campaign. We take you then as part of this big cohort, and we go and we try to put together those complex deals with all the complexity that you've described. We try and take that away from the consumer.
Do you get? What money do you get for doing that?
Well, we ask providers ultimately to contribute towards our campaign costs, but we don't make any money unless people save money. If there's no deal, then we don't get anything.
But you must be doing it to make money out of it,
Well, we do. We ask the providers also to pay our campaign costs.
Hold on, the providers are ending up actually getting less money in from the customers because they've reduced their rates, and then they pay you for the privilege of having a reduced margin?
In fact, that's what competition is, Matt, and that's exactly what it is. And that has worked really well in the other sectors that we work.
It would be worth it, I think, for them, Matt, if they got 20,000 customers to switch to.
Absolutely.
They would be more than
if
happy
they switch
to
from another provider rather than being existing customers.
Exactly. The banks now blinking well. It's a cartel at the moment that the rates are far too high, and if pressure came on them, they would be forced to cut them. So we've got to
It
hope
could all
that
get
happens.
a bit circular, though, couldn't it? One bank gets one deal with one bunch of one big switch, another bank gets, so you just keep cutting their margins, and they pay you for
isn't that what we want?
I'm not arguing with that at all. We're just wondering how it'll all work.
Listen, congratulations on your award from the Business Journalists Association and the Smurfit School Outstanding Business Journalists.
Thank you very much, Charlie. Thank you for bringing that up. Just didn't expect that. Thank you very much indeed. Charlie Weston, Personal Finance Editor of the Irish Independent. Oliver Tattan from One Big Switch. Thank you for joining us. Back after this.